Hey, it's Emma Stara here. I'd like to introduce you to a strategy that allows homeowners to get access to tax-free cash. The strategy I want to talk about today is a reverse mortgage. What a reverse mortgage is, who is it for, and some advantages and also disadvantages. But let's start off with what a reverse mortgage is. Well, in Canada, a reverse mortgage is a loan that allows homeowners to get access to a portion of the equity of their home without having to sell their home. It's a loan that does not require any mandatory regular payments. How much equity you have access to depends on your age, the appraised value of the property, and the lender you will be working with. And the loan has to be paid out when the last homeowner leaves the home, which means the last homeowner moves out of the home or sells the home or dies. So this is kind of like overall picture what the reverse mortgage is. And now to understand better, let's dive into some details. Reverse mortgage is available to you when you are 55 years old or older. You might be eligible to borrow up to 55% of the equity of your home depending on your age. The rule is the older you are, the more cash you can borrow. Reverse mortgage is available to you when you are a homeowner. You have to own a home and it has to be your primary residence, which means you live in the home for at least 6 months a year. Reverse mortgage gives you access to tax-free cash. A lender will determine how much you will be eligible for, and the lender will make payments to you. You can choose how often you receive payments. It can be recurring, monthly, quarterly, semi-annually, or annually, or you can get a lump sum, or you can get a combination of both. There are no mandatory ongoing payments. You don't need to pay principal or interest throughout the life of the loan. In case you don't pay any payments, interest accumulates on outstanding principal and interest, and the outstanding balance will increase over time. You don't need to pay back the money you receive. Your reverse mortgage must be fully repaid when the last remaining homeowner leaves the home. Homeowners are never forced to sell. When the home is sold, the proceeds from the sale are then used to pay back the loan. There are additional fees attached to the loan, such as one-time setup fee, appraisal fee, or independent legal advice fee. And the good news is that the lenders providing reverse mortgages in Canada guarantee that you will never owe more than the fair market value of your property at the time you move, sell, or die. Now let's talk about possible reason to take a reverse mortgage. For some people, a reverse mortgage can be an income source in retirement, or you can pay off debt, or make home renovations, or pay for in-home care services, or provide a gift to a family member or travel. It depends on you. Every strategy, every financing solution has its own bright side and not so bright side. And a reverse mortgage is no different. And I'd like to show you a few advantages and also a few disadvantages. So let's take a look. As for the advantages, you unlock your home equity without selling your home, and it's tax-free. You remain the owner of your home, not the bank. You continue to own and live in your home, and you will never be forced to move or sell your property. As long as you live in your home at least 6 months a year, you pay the property taxes, your home insurance, and you keep your home in good order. Options how you want to receive your money are flexible. You can borrow a lump sum amount or set up a recurring payments, and that way you are getting a steady stream of cash. There are no payments required until you move or sell. This is especially helpful for those who cannot afford to make payments. You can not refinance your home or take loans such as home equity line of credit because you would need to pay your regular payments, either principal and interest or even interest only. With reverse mortgage, there are no payments required. Reverse mortgage payments you are receiving do not affect old age security or guaranteed income supplement benefits. Here are some disadvantages of a reverse mortgage. Reverse mortgage requires a certain minimum home value. How much is the minimum value? It depends on the lender. You may be required to borrow a minimum amount as a lump sum, even if you do not need the full amount. The interest rates to borrow money through reverse mortgages are higher than through regular mortgages. Since there are no interest payments required during the life of the mortgage, the interest portion is increasing over time, and it will result in reduced equity at the time of the sale of the property. If you pay off a reverse mortgage early, it may result in a prepayment charge. To summarize this topic of reverse mortgage, I would like to say that every financing solution might be beneficial for some people and not so great for others. Reverse mortgage can be attractive to homeowners who are looking for stable, sufficient cash flow in their retirement, or they want to unlock a part of the equity of their home and no payments, and they want to stay in their home. And I know life happens. We don't know what's going to happen tomorrow, but if you are planning to stay, you don't want to sell, you don't want to move, but you're looking for sufficient, stable, steady cash flow in your retirement, or you just want to unlock a part of the equity, well-earned equity in your home for whatever reason, reverse mortgage might be a solution for you. And if you have questions, you want to discuss more details, I am inviting you to connect with me. We can talk. And until I hear from you, I'm wishing you all the best and thank you for watching. Bye-bye.